Hi guys, my name is Divine. This is digital monetization. I want you to like and subscribe if you are going to find this video useful. I'm just going to be talking about my simple crypto, my simple forex strategy. Um, it's just basically trend line. I understand most of you guys following me. Some of you might not really have access to laptop, so I'm just going to show you my sim forex strategy that you can use to trade GDP, USD, Euro, USD, BTC, crypto, stocks, and the rest. It's just a simple trend line supported with psychological levels. The other time I was speaking about um trading with crypto and the rest. You understand? I was actually using indicators then, but now I've gotten my feet in the trading market. I'm 17 years old. I started trading for like 4 months now, and by the grace of God, I've been seeing positive results. Let me even show you my demo account. I'm still trading in demo, but I've been making some kind of profits because of this strategy. I've made so far $195. So by the grace of God, I'm going to be depositing money, and I'll be showing you how to flip $10 to $1,000 step by step. So just if you are liking this content, just follow and subscribe. Now let's get to the video. So currently, let me just start again. Let me just refresh it for you guys. In forex, wait, in forex, now this is just a naked chart. Sorry about this. In forex, there are ways to trade. You understand? In order to be a professional trader, in order to be very professional in what you are doing, you need to understand your strategy. You don't need to be open into strategies and strategies. You need to understand a strategy. So in this video, I'm going to be showing my personal strategy that I use to approach this market, and I'm making some money from it. So it's just trend line coupled with psychological levels and chart patterns. So psychological levels, in case you don't know, they are round up numbers like 1.2500, like 50 pips, 50 pips, 50 pips. I'm still going to teach on that. So if you're a beginner, don't worry. I'm going to drop a video on how to calculate pips, lot size, and the rest. But if you are an intermediate forex trader that maybe are not profitable, I'm going to be showing you how to use this strategy and make the best out of it. So without further ado, let me go into the video. So a psychological level around up numbers that banks and edges they focus on, like 1.200500, 1.255500, something like that, supporting in a trend supported with a trend line. So I'm going to just edit this to another psychological level for you to see. So I'm going to edit this on that psychological level for you to see. So just stay tuned. It's a step-by-step process. Now this video is down 4 minutes. I just want to show you how I trade. First, we are going to draw a trend line. First of all, if you are drawing a trend line, you need to identify the highs and the lows. So this is a previous high here. This is a previous low here, connected with a trough here. So I just want you to understand it. Then we'll now map out the psychological levels. Once you draw the trend line, it's touching. We are getting two touches. Supported with the psychological level, we work. So now we map out our levels, our psychological levels. that banks focus on, like 1.2800. Let's make a psychological level. If you are not understanding or if you are not following, I want you to comment. I'll re-explain. I'll make another video. Okay. Psychological level. This is psychological level 1. I'm going to do it again. So, first psychological level of the chart is going to be 1.2600. Second psychological level of the chart is going to be the previous 50 pips below it. So that's going to be 1.25500. Another psychological level. Then let's draw the last cycle level. 1.2, probably 1.25000. So this is, so my advice for you is, I'm just showing you the simple way to scalp. You understand? So this is how to get sniper entries. Now we're waiting for a break or structure, a sudden break into the break out of the trend line. If it breaks out of the trend line and it breaks into a psychological level with a strong engulfing candle, will be shorting the market. You understand? Like if market breaks, wait, let me get, if market breaks from this point down here and shows a engulfing candle down here, will be shorting to the next psychological level. You understand? So psychological level sounds plays at support and resistance. You know, these are points that banks and hedge funds, they pay attention to. Like, see here, he reacted here and make a bounce again to another psychological level. Reacted here, he reacted here. So it is connected. Reacted here, it's connected. So what I do is I use three confluences. First of all, the chart pattern. Second of all, the psychological levels. And third of all, break of structure or trend continuation. You understand? Break of structure or trend continuation. That's how I trade. So currently the market is consolidating to the downside. It's going, I think is buyers and sellers are fighting right now. As you can see, they are fighting right now. So we're waiting for it to break this structure. Sometimes it will break and retest. Break the structure, then retest up, then break again, then we short. Don't need to wait for a retest. You just take your stop loss 20 pips below, then you aim for the next psychological level. Easy and easy. So easy and easy. This is how my strategy is, and it has been working. I took a trade this morning. Okay, let me give another example, another concrete example. Now this is my chart. This is my chart. Sorry. So this is my chart. This is another trade. I drew a trend line. Although this trend line is very, very straight, but see as you reacted around that psychological level and pulled back in. So sometimes you don't really need to wait for a retest after the break of structure. You don't really need to wait for a retest. Most times market don't retest. So you just take your stop loss 20 pips above this week. You understand? So Most importantly, we are looking for reactions of the candlestick patterns to enter the trade. If you see a shooting star engulfed, or a candlestick that have a wick and is engulfed like this, that is a confirmed candlestick pattern to enter a trade, supporting a psychological level and a break of trend line. You understand? Like here, this is a perfect trade. This was a perfect trade. This was a perfect trade. You understand? This was a perfect trade. So I'll give you other examples. Here again, see the connection here. See the trend line connection here. Made 2 bounces. Here, made 2 bounces. Between the third bounce, a break of structure at a psychological level and a push to the next psychological level here. You understand? A break of structure to the upside, then a strong bullish confirmation in a psychological level, then we belong the market to the next cycle level. That shows market was about to pull up. So I just used it for a good confirmation signal. It doesn't work every time though, because generally strategies are not really excellent. There are times that it will work, there are times it won't work. No strategy is the holy grail, like Jeffrey Benson said. But if you can maximize your strategy and make it better, you make money from it in the long run. So yeah, this is another example. I map out this trend line. It made 2 bounces, as you can see. A break in structure, a break in psychological level. Then we tank it down to the next psychological level. You understand? And that's so the patterns always play out. You just need to understand what you are doing, understand your strategy, and you'll be fine. Yeah, it broke. See, we drew a trend line, a trough. This is the first touch, the second touch. This is the first touch, yeah. The second touch, yeah. Then the third touch, yeah, which broke out from the candlestick. But you're not going to be shutting down here. You'll be waiting for it to break a psychological level and have a strong engulfing candle. That's a strong bearish engulfing candle, either bullish, bearish, and now because it's going down, it's bearish. So let's zoom in. Let me show you what I'm talking about. Candles like this. You shouldn't look for candles like this. Is what you should be looking for as confirmation. Candles like this. You shouldn't be, when you see some candles like this, you shouldn't enter. It shows a low volume of sellers in the market. When you see something like this, it's a strong confirmation to enter because of the high volume of sellers in the market within 15 minutes. You understand? So it's just a simple stuff. But if you feel like you don't really understand it, you can chat me up. You can comment in the comment section, and I'll be able to answer you. Yeah, again, like I said, this strategy is not a holy grail. It works most of the time, but it doesn't work every time. Yeah, again, this was a bounce. This was 2 structures, a correct trend line. Market broke the trend line, but it didn't really work. Yeah, again, it went up to some point. But it formed another trend line, then pounds, then it fell down again. So it doesn't work all the time, but most of the time you catch pips. Honestly, I'm telling you. Yeah, again, this is a perfect trend line example. So always look at the chart. Market always behave in a kind of way that if you understand it, you'll make money. So yeah, again, this is the first eye. Another a touch, another touch, then it broke the touch. You understand? It broke the touch, and this is a psychological level. He bounced back above a psychological level, then broke the trend line again, which is double confirmation plus a candlestick pattern, which is bearish. This is which is bullish. This is a bullish example. That's to show you the high volume of buyers in the market. Then we we put our stop loss just like 10 pips or 20 pips below, then we long it to the next psychological level. So it's just straightforward. Let me give you one last example so that you can go and do your back test. Here again, the market. This is the first low. This is the second touch. At the touch like this, there was a strong break in the market, hitting the next psychological level. So you see it. The market is so dynamic. Here again, this is a first touch. This is another touch. This is another break below the psychological level. The next break, a bullish break within the psychological level. Then you short to the next psychological level. That's how the strategy is. But if you are not clear in it, I can make a video again to show you. So thank you guys for enjoying the video. If you like it, please subscribe and click on the notification so that when next I'm dropping a video, you get notified. Thank you.